Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the macro bullish scenario where we're looking for a finished 5-wave structure to the upside in a wave 1, for then a wave 2 that is already finished and now the beginning of a bigger wave 3 to the upside, where most commonly a wave 3 is the biggest, most impulsive wave in a overall impulse, where you want to see a shape like this and volume increasing while price is moving to the upside. Now what you can see is that this wave 2 over here bounced just above the 0.5 and just before the 0.382, and this is less common because most commonly a wave 2 is bouncing between the 0.5 and the 786, which would be between 14.8k and 6k, and also ends after the 0.382. Now the 382, the time fib as well as the normal Fibonacci are taken from the low over here to the all-time high, and the fact that the low here has been made above the 05 and before the 382 might lower the probabilities for this particular scenario. Now in the more bearish scenario, we're still looking for more downside to come. We also have a 5-wave finish structure to the upside, but now we are looking for a bigger 3-wave to the downside, where if we look at the resistance for price, the biggest resistance is between 39k and 50k. The explanation is that we have over here around 39k the golden pocket plus the point of control over here, and around 50k we have the 786 with the value area high. So this is very important resistance for price, and if we look at this potential labeled wave B then in an ABC, you can also label it a WXY, but for the target over here it doesn't really matter, as inside this structure, this move to the upside, we're looking for an ABC, a 3-wave zigzag structure where wave C then ends inside of this resistance area. Now this area will be very important, as if price would enter this area, we have to assess the probabilities and the reaction here for then a move to the downside or a continuation to the upside. And in this scenario, we're then looking for a move to the downside where we have incredible support between 11k and 8k. Golden pocket over here taken from the low to the all-time high, as well as the value area low of this multi-year volume profile. So incredible support over here, as you can see. Now if we then change to the daily time frame and then we zoom in to what price has been doing more locally, then I have two scenarios for you. The first one is that wave A or wave 1 ended over here. We're looking for a 3-wave corrective structure for then continuation to the upside in either a wave 1, 2 and then a 3, or a wave A, B and then a wave C. Now you can see that the box over here is green and the one on the right is purple. Now that doesn't mean that if price would dump into this area over here, the 0.5 sitting at 23.2k and the 786 at 18.7k, that it is automatically a wave 2 if price bounces here to the upside. No, this is definitely also a target for wave B time-wise, because what you can see is that the yellow box is in between the 1 fib time and the 2 fib time taken from the low to the high of A or 1. And usually for a wave 2 you like a little bit of a shorter corrective structure in time, but if we continue ranging for a much longer period of time, the probabilities would increase for a wave B. But then again, even if we bounce over here, right, it can also be a wave B. Now what is interesting, however, in this scenario is that if we look at this being the high and then a 3-wave structure, if we look at a ABC, which is an expanding flat in a 3, 3 and then a 5-wave structure to the downside, then the low over here has been made higher than this low over there, which is not what you want to see. As in an expanding flat, you actually want to see this low being taken. The fact it's not taken means that we are then talking about potentially a running flat, which is not something that you really want to see, as that is very, very rare. Another thing one could argue is, hey, this is wave A, this is a flat in B, and then a wave C to the downside, and now you could say wave C ended below the wave A pivot over here. If I draw a horizontal line, you can see that these lows are lower than the low on the left. However, based on the newest rules from Elliott Wave International, you don't want to see a flat in a wave B in a bigger expanding flat. More info about that in Discord if you want to know. Now, if we then look at eventually a WXY scenario where we're looking for a 3, and a 3-wave structure, then ideally the 3-wave structure here to the downside and then a WXY finish finished over here, as this then is a 3-wave ABC to the downside, and then you wanted to see a move to the upside. Time-wise, it also fits nicely with WX and then wave Y ending over here. However, based on this price action and price making a new low, we have to change that opinion. Now wave W over here can be a zigzag and then an X and then eventually a Y to the downside, where Y is then also a zigzag in a 5-3-5. So then we have W zigzag, X flat, and then Y is zigzag. The problem is that in a sideways double combo, wave W and wave Y are not allowed to have the same structure. Besides, if this by itself is a whole wave Y, it starts to be very, very long in time compared to wave W and wave X. So that is something to note as well. Now, the second scenario is not necessarily too different. It's just that the high changed for A or 1. So the target area did not change at all. We're still looking for then a move to the downside to also take the double bottom over here, reach the 05 to the 786 area as most commonly 23.7 to 19K over here, taken from the low to the high over here. But now we're looking at this either being a WXY or an A, a B, and then a C. So we're still looking for a move to the downside in a bigger 3-wave move down, and that is something of course I cover in the daily updates where we zoom into this structure over here. So if we then finally look at the probabilities of the different scenarios, then on the macro, we are still looking for price to move towards the upside. And that is quite similar for both the bearish and the bullish macro scenario, where of course in the bullish scenario, you want to keep pumping for new all-time highs. But in the bearish scenario, we're also looking for still a move to the upside before downside. And that's why I mentioned it is so important to look at the reaction between 39K and 50K, as that will then decide what price is going to do regarding the probabilities for downside or upside. And if we look at the daily scenarios over here, we zoom in to the more local time frame, then currently for me the probabilities based on Elliott waves are a bit higher for this scenario, where the high is over here being an A or 1 for then a 3-wave structure to the downside over here, mainly because in this sideways corrective structure the probabilities are still higher for a move down. An ABC, as just explained, has low probabilities. A WXY, yeah, it is possible, but then W and X have the same structure, so a zigzag, which is not allowed. So eventually, like the longer price is ranging over here, the more or the higher the probabilities are for A or 1 to finish here, and then eventually we're still looking for a B or a 2 to the downside, extra support in this area, and then we can look for a bounce to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.